Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing my North American opening market comment for Thursday, September 29th. The dollar was largely higher at midday in Europe compared to its levels at the start of European trading. It was particularly strong against the commodity currencies, the Aussie dollar and New Zealand dollar. These were the currencies that gained overnight as risk sentiment improved following OPEC's agreement to cut production. In fact, the G10 currency it gained most against was the Norwegian krone, which is a total oil currency. On the other hand, the only currency it lost ground against was the yen, the safe haven currency that fell following the OPEC move. So we're seeing an unwinding of the positions that were put on following the meeting. It looks like the market agrees with my view that the OPEC agreement really isn't as big a deal as it looked like at first glance. Watch my video from this morning or look at the Hot Topics section on our website to understand why that is. As for this afternoon's indicators, the U.S. advanced merchandise trade balance is expected to deteriorate sharply. This is negative for the dollar as, of course, it widens the current account deficit. Furthermore, the reduction in net exports reduces GDP growth. However, the 12-month moving average of the figure seems to be fairly steady, so the market may be willing to overlook a one-month fluctuation. Now, wholesale inventories, which come out at the same time, appear to be a more closely watched data series. This figure also feeds into the GDP report. Inventories are expected to be unchanged again in August as they were in July. That could be disappointing to investors who are looking for a boost to growth from inventory buildup. It could therefore be a slight negative for the dollar. The final revision of U.S. second quarter GDP is expected to show somewhat higher growth than before, but does it matter at this point? Unless it's wildly different from what people expect, I wouldn't think it would have much effect on the market, as we've only got 2 days more left in the third quarter. Initial jobless claims have been fairly steady recently at near record low levels. The figure testifies to the strong job market in the U.S. and should be positive for the dollar. Pending home sales are expected to be unchanged on a month-on-month basis, but that would mean up on a year-on-year basis. That would be consistent with a rise in existing home sales next month, which would be bullish for the dollar. Now, home sales have been disappointing recently, but that may be more because there are so few homes left to sell rather than that demand is flagging. Finally, overnight we'll get the Caixin China Manufacturing PMI. That's forecast to be a little unchanged at 50.1, showing the economy still teetering right above between expansion and contraction. But as long as it doesn't slip into contraction, the impact on the market should be neutral to positive. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.